the other and think it's a silver bullet.
Kevin, what's holding EVs back the most right now? Is it choices? Profitability. Okay. Because I was going to say, is it, not having charging stations? Is it the cost? But it's profitability. Yeah.
No, it's a profitability. Look, again, consumer can buy what a manufacturer puts out there. And if you use the U.S. as an example, here's the example I give. Best-selling segment in the U.S. by revenue. I don't care about volume. A $25,000 compact car is not the same as a $55,000 pickup. I'm talking about by revenue. Largest segment in the U.S. is full-size pickup trucks. That's not an accident, right? That's where the profitability is. Mm-hmm. That's where the margin is. That's where the revenue contribution is. That's what's marketed to the public. That's what the public buys. So we miss how much the automaker influences what the consumer does. And on the day that EVs are as profitable as internal combustion, here comes everybody's EV.
Hey, one last question. Rivian's up about 12% today. We've got Tesla earnings this week, so it seems like everybody's kind of excited about EV earnings. Looking out, if you had to pick one automaker, either pure EV or other, that you think the world should keep a watch on this year, what would it be? And just got about 30 seconds.
Boy, I still believe that the legacy automakers are going to be the ones that drive adoption, right? If we're 5% adoption in the U.S., Tesla, Rivian, Lucid, and the like are not getting us to 20 or 50%. They just don't have the scale to do it. So I think if the technology is going to be adopted, it's going to be because it's profitable. And then the companies with the heft to really drive the consumer in that direction are the big guys and the big legacy guys. And I know nobody wants to hear that, but they're the ones that can actually move the market.
I mean, you've seen, go ahead, Carol.
No, go ahead.
I was going to say, you've seen the Mach-E's, you've seen the Lightnings. Yeah. There's a reason people love those.
Yeah, exactly. Great stuff. Kevin, thank you so much. Some really good thoughts on the EV space and Ford specifically. Bloomberg Intelligence Senior Auto Analyst Kevin Tynan, from the BI headquarters in Princeton, New Jersey. By the way, Ford up about 3.4%.
Well, let's get a check on the latest world and national news with Nancy Lyons in the 991 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden is set to name Jeff Zients as his next White House chief of staff. This is according to people familiar with the matter. Bloomberg Government's Emily Wilkins says Zients was the administration's former COVID-19 czar. He also served as director of the National Economic Council during the Obama administration.
He really does have sort of the economic background that is needed to deal with some of these big fights that are coming up with Republicans. Zients is expected to take the wheel after Klain leaves. That will be after February 7th, which is when Biden will be giving his State of the Union address.
Bloomberg Government's Emily Wilkins. A retired FBI official has been charged with working for Russian oligarch Oleg Deripaska in violation of U.S. sanctions. George Charles McGonigal, a former special agent, was arrested Saturday and charged today with money laundering and violating sanctions. Prosecutors claim McGonigal agreed to investigate a Russian rival of Deripaska in exchange for concealed payments. Theranos founder Elizabeth Holmes says the claims she planned to flee to Mexico if convicted are inaccurate. Holmes' attorney said the government misrepresented her trip, which she booked when she thought she might be acquitted. Authorities are searching for a motive into the shooting at a dance hall in Monterey Park, California over the weekend that left 10 people dead and 10 wounded. The gunman, an elderly Asian man, opened fire at a Lunar New Year celebration Saturday night. Police say the suspect took his own life after officers approached him in a white van yesterday. The mayor of Monterey Park, Henry Lowe.
I think many of us are still in disbelief that this type of incident would occur in our community.
Again, that's Mayor Lowe. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 2:41 on Wall Street. I'm Charlie Pellet. Stocks are now off session highs, but still lots of green on the screen, with the Dow, the S&P, and NASDAQ all pushing higher. S&P holding above 4,000 at 4,013, up now by 40 points, a gain of 1%. The Dow higher by 208, up by 0.6%. NASDAQ up 195, a gain of 1.75%. 10-year yield 3.51%, with the 2-year at 4.22%. Spot gold up $1, the ounce to $19.27, up by about 0.1%. West Texas Intermediate crude down 0.2%, 81.47 a barrel. As for the economic outlook and what it means for markets, Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
So I do think that we've spent so long talking about whether or not we're going to have a recession, whether or not we're going to have economic challenges. Let's just get on with it, let markets digest it, and move to the recovery phase. So I think overall this is a mixed bag, ultimately a positive thing, but not too much fun in the here and now.
And again, we've got the 10-year in the here and now at 3.51%. Wells Fargo banking analyst Mike Mayo says bank earnings have yet to show evidence of a recession, with a majority of the sector now having reported results for the fourth quarter. The KBW Bank Index up now by 1.9%. Among individual bank stocks, JP Morgan Chase up 1.5%, Citigroup up 1.7%, Wells Fargo up now by 2.5%, Bank of America up by 1.3%. Recapping, S&P up 42, a gain of 1.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, a wind turbine taller than the Statue of Liberty collapsed last June in Ames, 90 miles northwest of Oklahoma City. And a few days later, another one, Tim, collapsed in Colorado.
Yeah, the instances are part of a rash of recent wind turbine malfunctions across the U.S. and Europe, ranging from failures of key components to full collapses. Writing about it in the new issue of Bloomberg Business Week is Ryan Bean, industrials reporter for Bloomberg News. He joins us along with the editor of the magazine, Joel Weber. Both are in our Bloomberg Interactive Brokers studio. This story, by the way, it's in the new issue of Business Week. It's out on newsstands later this week. You can already read the story online at bloomberg.com/businessweek, and of course, always on the Bloomberg terminal. Joel, I want to start with you. How bad is this? I mean, do we, are these things like falling all over the place?
Hard to know, no. But the bigger story here is that as sustainable sources of energy have become so much more cost effective, everybody's been scaling up. So turbines have gotten bigger, bigger, bigger. It's like, just imagine steroids, and these things have gotten massive. And at the same time, maybe the same quality control hasn't been going into these products as they've gotten bigger. So Ryan, what does this mean for the companies and for the rest of us who have to, live with turbines that might snap and be flailing around in the wild?
Sure. Well, first of all, I don't think most people who live near or have these turbines in their community need to be super, super worried all the time. But right now, it means that companies are just paying a lot of money to address these quality issues. I mean, just a few days before we published this story, Siemens Gamesa, one of the largest wind turbine manufacturers in the world, announced, a pretty significant charge totaling hundreds of millions of euros related to, premature component failures in their turbines that were already installed. I mean, GE has taken, similar charges to fix, issues with their fleet of installed turbines. And I think, one thing that's important for listeners to understand is, like, this industry is still kind of in its, I guess, call it an adolescence, if you will. I mean, we've seen, just not only turbines themselves get bigger, but projects get bigger and volume going up. And these companies have had to sort of race to develop a supply chain and refine their manufacturing practices to go along with that growth. So I think that a lot of this is sort of like growing pains to a degree.
And what do we know about the factors? Are they external factors that are coming to bear on the turbines, or is it the turbines themselves that seem to be faulty?
It can be. It's tough to say. It's a little bit of both, right? I mean, in one of these instances, that you mentioned at the beginning of the show, some officials from the operator of the wind farm told, the local county commissioners that it was due to a blade flaw, and that, 4 other turbines had experienced the same blade flaw that caused, similar failures. And then, over the course of our reporting and some of the other publicly reported collapses, some of them have been linked to construction issues. Some of them have been linked to defects with componentry. So it's a variety of things. It's
Nobody's
not just
been
one thing.
hurt though, right?
I don't know if nobody's been hurt, but none of the instances that we reported on had any injuries involved. No.
What's interesting is it's not just land turbines. This also happened, at least in one instance, to an offshore wind turbine, as
That's
you
right.
describe in your story. And I'm wondering, Ryan, I see stories like this, and I think about the politics of wind, because it's very political.
Sure.
If we think back to what happened in Texas a couple years ago, during the deep freeze, when some wind turbines stopped working and generating power there, and then you have all these offshore wind projects in communities around the country that are creating a lot of tension in communities. Is a story like this just ammunition for opponents of wind power?
I'm sure that opponents of wind power are going to look at this and point to this as evidence of, say, we can't keep rushing to push these things out all the time. But then again, as you point out, wind has always had its detractors, right? I mean, from local community residents opposing an offshore wind farm because it'll disrupt their beautiful coastal views, or concerned fishermen who are worried about an offshore wind farm will disrupt their livelihoods. Wind has a variety of groups and folks who are opposed to this. And I think there's always going to be a contingent out there that will look for reasons to slow down this technology.
I'm curious, Ryan, if what in your reporting, that as a result of what's happening, and I highly recommend everybody check out the story either online or in the magazine later. And I don't know if we have pictures to put up on our YouTube and Bloomberg Quick Take streaming service, because to see like the blades bent, it's just like
it is like crazy.
Right?
It's just like carnage.
Yeah.
That came through here, and you're so used to just seeing them slowly turning.
These
in the
majestic
wild.
machines,
Yeah,
just
like,
providing clean power. No, when they go wrong, when large infrastructure can sometimes fail, right? And that's sort of by its nature. When it does fail, it can be really, really dramatic. And frankly, that's sort of what got me interested in this. Early on, when over a year ago, when we would see a couple of reports of a turbine failing in Europe or a turbine failing in the U.S. So just recently, after General Electric, which is one of the main companies that I cover on an ongoing basis, when they took a big charge in the third quarter last year, I decided to really sort of dig in to figure out what's really going on here and how much of an issue is this really.
Let's stay with that. How did CEO Larry Culp characterize those expenses when these things come up?
Yeah, what he said was that that charge is about a $500 million charge to basically reflect that the amount of money that they were going to need to set aside for warranty coverage and for repair campaigns was about twice as much.
Who knew there was a warranty on these puppies?
Oh no, yeah. Everything has a warranty, including wind turbines. Yeah.
You take the serial number, you write it down, you mail it in.
I just see this, the tech on the front. Where's the serial number on this thing? Where do I find this? These things are huge. And the reason I know they're so big is, just driving in the desert in California years ago, but those are tiny compared to what you see these days.
They are.
I've been on the highway before, and you see like parts of these things being taken to places, and you're like, wait a second, that is just like one turbine? How big are these?
The largest blades that are coming out now for offshore machines to be installed in the not too distant future, they're as long or longer than a football field in some cases.
For a blade.
For a blade. So imagine that for a moment. And there's 3 of them.
Yeah.
And I'm glad you mentioned the transportation issues. Some of the factors that are going to limit how big a turbine can be in any given space is not necessarily related to what's physically possible with the technology. It's like, can you get a blade to a farm on a piece of land in the middle of rural Nebraska or what have you? Can you fit them on the roads? How do you maneuver a truck carrying a blade of that length, around a corner? It's a fascinating industry, and the scale of the stuff is sort of awe-inspiring.
And of course, the insurance premiums will go up.
Of course they will. Of course they will. Incredible read. And like we said, check out the pictures. We threw them up there for streaming and for YouTube, but check it out online and on the Bloomberg and, of course, in the magazine. Ryan, thank you so much. Interesting story. Ryan Bean, industrials reporter at Bloomberg News, here in our Interactive Broker studio, along with the editor of Bloomberg Business Week magazine, Joel Weber. All right, you are listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic. This is Bloomberg Radio.
2:53 on Wall Street. I'm Charlie Pellet with today's company headlines. Wayfair shares are surging again today as recent moves to cut costs spurred upgrades from at least 3 analysts, 2 of which went from bearish views on the stock to the bullish one. We have got shares right now of Wayfair up by 22.5%. The upgrades came after the household goods-focused e-commerce company last week said it was cutting about 10% of its workforce. Speaking of cutting the workforce, Spotify Technology is planning to cut about 6% of its employees, joining a slew of tech companies from Amazon to Meta Platforms in announcing job cuts to lower moves. The move was announced in a filing this morning. Spotify shares, they're up now by 1.9%. Microsoft is making a multi-billion-dollar investment in OpenAI, the pioneering artificial intelligence research lab behind ChatGPT, as the software giant looks to more closely tie these text and image generating programs to its offerings. Now, this news comes less than a week after Microsoft said it was laying off 10,000 workers as a weakening economy crimps software demand. Microsoft will be reporting earnings tomorrow, and today we're looking at Microsoft shares up now by about 0.7%. Again, recapping, stocks are higher. We are well off session highs right now, but the S&P is up by 31 points, a gain there of just about 0.8%. Those are the company stories we're following this hour. I'm Charlie Pellet.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week on this Monday afternoon. Let's return to Washington, D.C., to our 99.1 newsroom for the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Poland is asking Germany's permission to send its German-made Leopard tanks to Ukraine. Those tanks are considered essential by Ukrainian defense officials who say they're needed to help push back the Russian army. Former U.S. Ambassador to NATO, Kay Bailey Hutchison, tells Bloomberg why Germany is so hesitant to give the okay.
In the aftermath of World War II, they are not willing to lead in security, and I hope they get over this because we need Germany. They have capacity. They could be such effective security allies, and I hope that they will do it.
Former NATO Ambassador Kay Bailey Hutchison. Elon Musk says his idea to take Tesla private for $420 a share was not a joke. He made that claim in court today. The CEO is defending a controversial tweet from 2018 in which he said he had funding secured. Shareholders contend in their class action lawsuit the tweets were lies that cost them big losses from wild stock price swings. 4 members of the Oath Keepers have been found guilty of seditious conspiracy in connection with the January 6th Capitol attack. The group's leader was also convicted just weeks ago. A candlelight vigil will be held in Southern California tonight to honor the victims of Saturday's mass shooting there. 10 people died and 10 were injured when a gunman entered the Star Dance studio in Monterey Park and started firing an automatic handgun. Brandon Say wrestled the weapon away from the assailant.
He was looking past me into the ballroom, and then it seemed like he was looking for people to harm, I think, because the way he was looking seemed like he wanted to harm others.
Brandon Say tells ABC News something just came over him to try and grab the gun. The shooter was later found dead of an apparent self-inflicted wound. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much, Nancy Lyons. Really appreciate that update. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could qualify for up to $26,000 per employee if you kept them on payroll during the pandemic. It's simple and easy to see if you qualify. Learn more at getrefunds.com.
All right, you're listening and watching Bloomberg Business Week. In just a moment, we're going to head over to our TV colleagues, talk a little bit about today's rally and what else is of interest in the markets today. A lot going on. In the meantime, we did want to mention a story. I believe it might still be the most read on the Bloomberg, and we talked about it on our planning call. And this has to do with Ken Griffin's Citadel churning out a record $16 billion in profit for clients last year, outperforming the rest of the industry, the hedge fund industry, and eclipsing one of history's most successful financial plays.
Yeah, the top 20 hedge fund firms collectively generated $22.4 billion in profit after fees. So if Citadel turned out a record $16 billion in profit, Carol, then they took the vast majority of that. This is according to estimates by LCH Investments. It's a fund of hedge funds. Citadel's gain was the largest annual return for a hedge fund manager, surpassing the $15 billion that John Paulson generated in 2007. Of course, his bet was against subprime mortgages.
Yeah, a great call. What's interesting is Citadel's performance, not about one trade. Its flagship hedge fund gained 38% last year by trading everything from equities to commodities. Bloomberg put that out earlier this month. The firm made money in each of its 5 core strategies, which also included fixed income and macro, quant and credit. Citadel returning about $8.5 billion in profit to investors at the end of the last year. So, hedge funds, transparency. We don't know exactly what those trades were. Maybe more will come out.
I don't even know if we know even anything close to exactly, Carol.
Come on, Ken.
Are we going to see any of that?
Just a little for the rest of us.
I'd like to know.
We
what
little
worked.
folk. All right, folks. Check out that story. It is the most read on the Bloomberg in the past 8 hours. In the meantime, we're going to get back to the markets with our TV colleagues, our cross-platform coverage. Bloomberg's countdown to the close. It starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Happy Monday. Romaine Bostic here alongside Katie Greifeld. We're joined right now by Carol Master and Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio, Quick Take, as well as on YouTube. And Carol, we left off Friday. There was a lot of questions about the conviction behind that rally, whether it was just sort of being distorted by options expiration. And we came in today, and I think at least for now, we had the answer, is that there is definitely some conviction behind moving this market higher.
Yeah, and kind of interesting ahead of a week that's full of some really big earnings. Microsoft, Intel, Tesla as well. We'll see whether or not they maintain the momentum, at least the bullish momentum. Having said that, if you look for some outperformance, check out the semiconductor space. The Philly stocks, it is definitely up in today's session. Big reason why, you had Barclays coming out. This is what they said in a research note this morning, a frown turned upside down. They detailed an outlook for semis into 2023, one that is getting more positive with upgrades and more optimistic price targets for some of the big names. So check it out. You can go through the research. It's on the Bloomberg and at Bloomberg.com. But we've got Advanced Micro. It's up 7.6%. NVIDIA, one of the names that many, including Barclays, kind of singling out as a gainer potentially because of the interest in AI, artificial intelligence. That also has been exacerbated thanks to Microsoft buying into ChatGPT. And then you've got Qualcomm. That stock's up about 6%. So investors, no doubt about it, all in on the semi space.
For some reason, they're all going all in on electric vehicles today. I mean, it just speaks to the risk on sentiment that we're seeing. Tesla's up 6.7%. We got Rivian up close to 11%. Lucid Group up 10%. Nikola up more than 7%. Romaine, all this happening at a time where we've got Tesla results happening after the close on Wednesday. And then, of course, Elon Musk's securities trial as well that's happening now. But, that's not dissuading investors.
All right, well, we talk about the biggest contributors here to the broader market, a broader market that was up on the S&P 500 by about 1.7%, basically having that right now up about 0.9%, but it is, Katie, above 4,000 right now on the S&P 500, above that 200-day moving average. And something I've been keeping an eye on right now is the NASDAQ. The NASDAQ 100 at one point was up more than 2% and really just shy of that 200-day moving average, which would actually be a more significant reclamation than what we've seen with the S&P.
Well, you can see that halving very clearly if you look at the sectors, because when I checked when our program started an hour ago, all 11 were higher. Not the case right now. You have 7 in the green, 4 in the red. Still leading, though, is tech. That sector is up close to 2%, but we saw energy, utilities, materials, and real estate flip into the red, Romaine, just in the last hour.
Of course, all the talk today as far as individual movers does center around what we've been seeing with Salesforce. The shares up about 3% here. Elliott taking an activist stake in the company, and a lot of questions right now about what type of change they may affect, if at all, to that strategy, and more importantly, to Mark Benioff and how he leads that company. Spotify shares up about 2% here on the day. That company announcing a bunch of layoffs here, and investors, as you've seen, rewarding companies that are tightening their belts. Meanwhile, keep an eye on 2 payment companies companies. PayPal has been under pressure all day long. This on the back of a report that some of the big banks are looking to set up another alternative payment networks to compete with them. And Synchrony Financial down about 4% here on the day after coming in with worse than expected results for the most recent quarter. But Carol, you started off talking about the big week that we have when it comes to earning, and more importantly, the big week that we have when it comes to tech earnings here. You take a look at the chart on the screen right now, and you get a sense here expectations are a little bit low. Tech profits expected to drop here. Once again here for the most recent quarter, this would be the second straight quarter of declines. And if that does come to fruition, guys, it does certainly call into question the rally that we've seen on some of those names over the past few days.
Yeah, really good point, and something that certainly seems to be on the radar of Mike Wilson, of course, strategist over at Morgan Stanley. What's interesting is he says, you know, the enthusiasm that we're seeing in equities as of late really at odds with some of the weakening economic data points as well as those earnings estimates continuing to break down. As you know, he is bearish on earnings when it comes to and the equity market for this year specifically. What gets him excited when it comes to earnings and potentially equities is 2024. He caught up with our team on TV earlier today.
As bearish as we are on kind of earnings in the near term, we're actually probably more bullish than most on 2024 because we think we're in this, you know, boom, bust, boom environment. If you agree with our earnings call next year, then you almost have to agree with our earnings call this year, and the market won't look through that.
All right, there you have it. Boom, bust, boom from Mike Wilson over at Morgan Stanley. I mean, some of it makes sense. You know, we constantly kind of hear that we're going to see two markets this year, right? Concerns about the second half, and then maybe we get some clarity when it comes to Fed policy, the economy, and earnings in the second half.
Yeah, maybe clarity, but, you know, I look at the chart of the S&P 500 over the last year or so, and look, I'm no technical analyst, but I overlay a 200-day moving average line, and it shows me that we haven't been able to sustain anything beyond just a couple of weeks of stocks staying above their 200-day moving average. You know, we saw it earlier this month. We saw it at the end of November, early December. We saw it, you know, last year in March. It's just nothing has held. So this question is, does this one actually have legs?
Yeah, and you can see for that chart, that yellow line, it's really like a magnet, that 200-day moving average, both to the upside and the downside whenever we stray too far. But I don't know, back to the earnings call, it's really interesting, again, that stat that Romaine highlighted is expected to be a second straight quarter of, you know, profits coming down. You layer that on top with all of the layoffs that we're seeing from tech companies, and yet you look at the composition of the rally that we've seen year to date, it's all big tech.
It's all big tech, and again, it gets to this idea too of if we are sort of on the precipice of what is going to be a new bull market. History shows that anytime you have that transfer of cycles, the new leadership is usually different from the old leadership. So if everyone's gravitating back to the Apples and Teslas and Microsofts of the world, I guess the question then becomes, Carol, are they going to get this wrong?
Yeah, exactly. And I guess when it comes to earnings, first of all, those estimates, you know, continue to come down. Are they down enough? I don't know. Is the bar too low? I mean, does it set it up for easy, maybe beats eventually by the time we get through the earnings season? The other thing I would say is that as companies jump out to cut jobs really quickly, it seems, you know, what does that do to preserving margins and essentially helping them beat when it comes to EPS, and do investors like that?
And what does that mean about their outlook, though, too? I mean, everyone's so focused, oh, this is great for margins, but, I mean, if you're thinking you're going to grow, you're not going to be cutting jobs, so.
Well, think about Microsoft. Sorry to jump in there, though, but they're investing, what, $10 billion in AI over the next several years. I think it's a decade. At the same time, we know they're laying off workers, so at least Microsoft is trying to have it both ways there.
Yeah, but one important thing I think we need to keep in mind with these layoffs is that for many of these companies that have announced these prominent layoffs, we're still at a place where there's, you know, a higher number of employees net than we've seen at almost any other given time. So over the last couple of years, I think it's fair to say a lot of these companies overhired, and maybe this is just a return to the mean.
Yeah, I feel like everybody says worry, 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 and yet we still have a strong job market overall. All right, we're going to continue this conversation. Lots to come. Our cross-platform coverage on radio, TV, YouTube, and on Bloomberg Quick Take. We're going to count you down to the close on this Monday with Beyond the Bell. That's coming up at 4 p.m. The headlines that are crossing when it comes to jobs. We're watching certainly the debt ceiling in Washington. We're also watching a continuation of what seems to be the opening of China, yet there are still some concerns as we watch the numbers of COVID cases coming out of China. There's so much going on, and we thought we've got to revisit this, especially coming off of Davos, where it does feel like maybe there's a warming of China relations between maybe the U.S. and China specifically. I just feel like there's a lot. We want to make some sense of it, Tim.
All right, well, let's get eager to hear what our next guest has to think. Back with us is Dexter Tiff Roberts, Senior Fellow with the Atlantic Council's Asia Security Initiative, also Mansfield Fellow at the University of Montana. He's also an author and a former Bloomberg Businessweek China bureau chief. His book is The Myth of Chinese Capitalism, The Worker, the Factory, and the Future of the World. He joins us via Zoom from Missoula, Montana this afternoon. Tiff, it's always good to have you on the program. I want to go back to what Carol was saying. It's interesting to hear, Carol, your interpretation of warming, right? This idea of warming. And I think certainly that idea has a lot to do with a move away from COVID zero. Tiff, what's your interpretation of what's been happening since we last spoke?
Yeah, well, indeed, they're clearly signaling that they decided that it's time to reopen, both obviously domestically with the end of COVID zero, the end of most of the pandemic restrictions, and also internationally. So we heard from Vice Premier Liu He, often called the economic czar of Xi Jinping, at the Davos meeting. I think he said, quote, opening up to the world is a must, not an expediency. And, you know, we're seeing, we've got Blinken heading to China in February 5th and 6th, I believe it is. He'll meet with the new foreign minister, Qin Gang, the former U.S. ambassador to the Chinese ambassador to the U.S. Indeed, it looks like that is the message they're putting out is that China is open for business again.
Did this surprise you the way it surprised me? Because for so long, we spoke to people, Tiff, who would say, you know, Xi Jinping is sticking to his COVID zero policy. And then almost overnight, there was this abrupt shift. Did that catch you off guard?
Did feel like whiplash.
It did.
It absolutely caught me off guard as well. I don't pretend like I caught that one coming at all. I did not think they could do it. I thought that the pain associated with moving towards what they've done, a much more open society and economy, was going to be too high with the massive infections and mortalities. Well, we've seen the massive infections. I mean, the latest numbers from the Chinese government is 80% of the population may have already gotten COVID, over 1 billion people. We don't know exactly what the mortality numbers are, but they are very high. We do know that. So the cost has been high, but they took this step and caught me, like most of the world, off guard.
Hey, Tiff, I feel like in so many regards, we are living in like the Charlie Brown economy or the Snoopy's economy. Like, you know, where, come on, people, whether it's just, there's so many different things, whether it's Tesla and Elon Musk or whether it's China, you know, like we've seen this before where things seem to warm up and then all of a sudden the football gets pulled out from us and it's like, oh, come on, how did we not know this? Is there something that we know that China is being very true about wanting to be part of the global economy, play on the global stage? Like how, or like what's changed beyond the borders opening up again?
Yeah, well, I'm with you on that, Carol. I think the football, unfortunately, will get pulled away again. I do think that there was a recognition, apparently, in Beijing that the economic costs were so severe of the COVID zero policy, and also, by the way, COVID zero wasn't working anymore, and infections were spreading rapidly before they lifted the restrictions, so that they decided that they needed to make this abrupt U-turn and actually open the economy. They've done, you know, we've talked about the positive messages to international investors. They've been putting out positive messages at home too. So we had the head of the PBOC, Guo Shuqing, say that the tech crackdown, or they call it the tech industry rectification, was basically complete. Xi Jinping has made some nice statements about the importance of private enterprise and the private economy in China. But I'm with you on that. I think that this is likely a temporary reaction to very, very difficult times that China is facing, has been facing economically, and I don't see it being long-term and sustained.
Let me also throw on top of that this planning of China creating this government-backed app, Strong Nation app, I believe is what they're calling it, to integrate a variety of services. And they're talking about ride-hailing, freight, and other things. You know, it's because the government is concerned about private data hoards. Our government is too, so let's be fair here. But I do wonder, like, every day I feel like, so how do I cross that? Like, they're saying, wait, we want control over this. Do we see it as the same concern that our government has, or is it something much more controlling in China?
Well, I think you're correct that we share the concern about, you know, large amounts of the population's data in private hands. And China has that concern as well. And indeed, much of the tech crackdown that we've seen over the last couple of years has been, as you know, been directed at those big tech companies that have amassed huge amounts of data over the Chinese about the Chinese population. On the other hand, I do think it's more than that. I do think that there is an aspect of Xi Jinping and the party wanting to control the private sector, and there's a response to the private sector whenever it becomes too successful, this desire to sort of tamp it down and remind it that ultimately it should be answerable to the party. There's also, as we know, a real emphasis on ensuring that, you know, the commanding heights, if you will, that for years now are supposed to be held by big state enterprises. And I think there's part of that in what we're seeing now as well.
What about this idea of new alliances? And it's something that Carol and I have talked about with you over the last year, Tiff. Where are we now with this sort of new world that's emerging in post-Russia's invasion of Ukraine and post-COVID in China? Are we seeing China and Russia ally themselves and it's kind of the rest of the world on its own?
I think that we can't underestimate how close that relationship really is between Russia and China. I mean, it is to a degree a relationship of convenience. Both Russia and China agree particularly on one thing, and that is that the U.S. has got too much power and they don't like it, and the U.S. they feel interferes and threatens their own power. So it's sort of a marriage of convenience. On the other hand, I think it's very real. I think it's very strong. Those concerns that the two countries, Russia and China, share aren't going to go away. Russia's afraid of, Russia says it's afraid and probably indeed really believes that NATO is pushing up against its borders. China very much feels that particularly the U.S. is pushing up against its borders in the South China Sea, and particularly with Taiwan. So I do think that is a real. That's the big sort of rejiggered world of alliances is the Russia and China and a lot of other countries that either are standing with the U.S. or not sure exactly where they stand, trying their best not to get crushed by either of the big giants, particularly the U.S. and China.
Hey, one thing I wanted to ask you, and I know you're not a stock guy, but you understand this relationship of China and how it can change.
And you used to work here, so
you know
stocks, if anyone who's worked here.
You understand the connection of all of these worlds. If I look at the NASDAQ Golden Dragon China Index, which Tim and I talk about a lot, it's the Chinese names that trade here, the Chinese ADRs that trade here in the United States. They are up about 80% since late October. Mind you, they were beaten down and I think are still way off their highs. But having said that, there's been enthusiasm and investors have been moving back into them. Do you think investors are doing that at their own peril and have to be smart about any company that's based in China still?
Yeah, I mean, I think, and we're seeing it across the board. I mean, MSCI Asia Pacific Index is way up since October as well. It's way up since January. Foreign investors, I think, have bought upwards of $16 billion of mainland China stocks so far this year, just in January. So I think China is likely to easily. We're going to see some good GDP growth this year. Easily can top 5% growth, I would say. If you look at the medium to the long term, just because it's 5% growth doesn't mean the economy actually fixed its many problems. So yeah, I think at their peril. I mean, you can make some money in the stock markets, absolutely.
Got it.
In 2023.
Tiff, you got to be really quick. Just got about 20 seconds here. Your book, The Myth of Chinese Capitalism, out about 3 years ago. If you were writing a book today, what would the title be? Just be quick.
The title would be, this isn't a great title, but something else is maybe China isn't going to take over the world.
Oh.
I like it. I like it. Are you writing a new book?
I'm heading in that direction, Carol. Yes, yes.
All right. Well, we look forward to it and future commentary. Tiff, thank you so much. Tiff Roberts, Senior Fellow of the Atlantic Council's Asia Security Initiative, joining us on the phone from Montana. This is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 321 on Wall Street. I'm Charlie Pellet. This update brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The sacrifices you made keeping your employees on payroll during the pandemic are not forgotten. Check the potential refund your small to medium-sized business may be eligible to receive through the Employee Retention Credit with no upfront costs. Learn more at getrefunds.com. We check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ solidly in the green, but off session highs. Let's head right over to the first word breaking news desk for today's afternoon call. Here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green, but like you said, well off their session highs. The Dow's up 196 points, was up 400. S&Ps are higher by 40, and NASDAQ is still up 195. The U.S. 10-year yield at 3.52%. Gold and oil are little change. Bitcoin trading higher by 1.1%. And of the main 11 S&P sectors, only energy and utilities were in the red. Leaders to the upside in the Dow, Intel and Salesforce, while Procter & Gamble fell 1.4% and led to the downside. And in the tech space, Microsoft is making a further $10 billion investment in OpenAI. In other news, Ford plans to cut 3,200 jobs in Europe, while Spotify to cut about 6% of its employees. Wrapping things up, Crane Holdings reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we're watching a lot of different companies. As you know, we talked about Ford. We are also watching Salesforce. And this company, the stock, specifically rallying for the third day in a row. Tim, it's up another more than 3% as activist investor and hedge fund Elliott Investment Management takes a multi-billion-dollar stake in the company. This is according to a person familiar with the matter.
This after the company said earlier this month that it's reducing its real estate footprint and cutting 10% of workforce that has almost tripled in the past 4 years. With what you need to know, let's bring in Bloomberg Intelligence Senior Software IT Service Analyst Anurag Rana joins us on the phone from New Jersey. So this news came out yesterday. I believe the Wall Street Journal had the scoop originally, Anurag, and I know you were watching it closely because it's one of the companies that you follow. But what were the thoughts that came into your head when you saw this Elliott Investment Management taking a stake in the company? And we should say a multi-billion-dollar stake.
Yeah, I mean, I would say the first gut instinct was, oh, I'm not surprised. And, let's see what these guys can push through on the board, whether it's going to be cost cut, whether it's going to be more buybacks, or whether they're going to ask for a change of leadership. So there's going to be a lot of, things to focus on. Salesforce is one of the most important software companies that we have. It's the pioneer in cloud software. And, it has seen some pressure in terms of valuation over the last, year and a half or so.
So is the pressure in valuation because of mismanagement? Is it because of some other reason? I mean, and this speaks to, Mark Benioff, right? This is his baby. And I just wonder, does he have to be worried about his job?
I mean, I think it's a bit of both. I don't think Mark's going to be concerned about, he's done very well over the last 24 years, both in terms of, establishing a brand and establishing a company that is, frankly speaking, I would say the second most important one after software in the application space. From our side, they did, I would say, after the Slack acquisition, people were pretty unhappy about, the impact that would have on margins. So, from that side, I think there are certain issues. We have seen also in the last couple of months, a lot of senior executives, leaving Salesforce. So there's a lot going on at this point, and I think this could, bring some sanity into this entire picture.
What kind of sanity?
I think the first and important one would be, I would say that, try not to go out and make any large deals. I think that's going to be the first one. Focus solely on profitability as well as steady organic growth rate. They have a product that has far bigger market share than anybody else in the few categories that they compete with. So focus on that. Try to I would say hone in on a few things that they do really well and just, let go of all the others.
Was Slack a mistake?
It's a tough thing to say. It's too soon. And see, from a technology point of view, it's a very good deal. I would go against that. But what has happened is it has impacted, profitability of the company. And just as I said, a couple of months ago, we had the founder and the person who was running Slack, Stuart Butterfield. He left the company also along with the co-CEO. So it has left a lot of questions as to what's the future direction of Slack. And we won't know about it till I would say a few quarters down as to how growth rates are in that business.
To describe Salesforce as acquisitive might be an understatement, Anurag.
Exactly.
Does that change after a significant stake from this from this organization?
Yeah, I hope so. I mean, because one of the biggest complaints investors had, or I've had actually, to be honest, in the last few years has been that this is a good company. You don't really need to acquire this much in order to show growth. If you focus on improving profitability, slowly every year, that is going to be well rewarded by investors, just not sales growth. Now, also, we are also seeing a completely different season when it comes to technology companies with more focus on free cash flow rather than sales growth. So I think there is going to be almost, I'd be very surprised to see a large deal coming out of Salesforce now. I think the focus is going to be, return cash to the shareholders. This company generates over $6 billion in free cash every year. I see no reason why they can't deploy that.
Yeah, no, that's interesting. Hey, Anurag, what do you make, though, of it feels like, Salesforce and other big tech, coming out very quickly, it feels like, with job cuts ahead of earnings releases. In terms of the timing, why not just wait, or is it just to try and get ahead of it all?
I think the why not wait is primarily because when you see, sales growth slow down, you have to respond accordingly.
Okay.
In the same way, they actually hired a lot when the sales growth was going up during the pandemic. I mean, these companies hired a lot. If the sales growth is not going to be here in this year, you might as well wait till that comes back.
Okay. Well, let's think about, this from the perspective of the recent cuts that we've seen at the company. And I think it's really important context that we talked about at the beginning that just over the last few years, it's almost tripled its workforce. So cutting 10% is not that big of a deal. Is that right?
I know exactly what I mentioned to Paul and Tom Keene this morning. Is like, listen, if you're looking at this with the lens of something in the last few months, then you're right, it is a big headline. But if you look at it over a 3 to 5 year period, I mean, it's not that big of a deal, honestly. If something has doubled its size or, grown 100%, giving back 5 or 10%, it's exactly what's happening in the revenue base. So, and again, the other thing to remember is, and again, it depends on what your view on tech spending, because tech spending and hiring go hand in hand. In order to grow 10% sales, you're going to hire 9 or 10% of your workforce has to go up. So next year, if we do see a rebound in tech spending, all these jobs then come back. I mean, it's not going to be something that's not going to be there for a long period of time.
You write in your research, Anurag, about valuation at Salesforce, and you say although Salesforce's valuation is well below its previous highs, it's still much higher than those of legacy software vendors such as SAP and Oracle. Whenever I feel like we talk about a company, we have to talk about it in relative to others in its space. So how do you kind of look at those three or pit Salesforce against SAP and Oracle?
So the way you want to think about this, just because Salesforce was always, bundled with cloud software companies, its valuation was always much higher. So let's say it's, priced on a price to sale basis, or in that matter, 30 times revenue, 30 times sales, or 30 times earnings or so. Now, if they are not able to accelerate sales, as I think it could be a danger if they don't get their act together, then people are going to start bucketing them with legacy software companies that are not growing as much, the likes of Oracle and SAP. And that in that way, their valuation can, trend downwards even more. So it's really up to Salesforce's management team to showcase and say, listen, we can still grow 15 to 20%, and you should bucket me in the high growth category and not with the slow growth category.
Okay, let's even go, just in the last minute and a half that we have with you on Anurag. Take us out bigger picture, because, if we're talking about these, software and IT services companies, they're facing headwinds that a lot of the larger tech companies are facing as well. You mentioned a couple of them there. As we get into the midst of earnings season for the final quarter of 2022, what's top of mind for you?
I think the top of mind for me is what is the body language of some of these executives saying, not just talking about what's happening near term, but showcase to say that, listen, This is not something that came during the pandemic and is it going to go away? These are some multi-decade trends. Let's say AI, for example, or IoT. And in order for any company to take benefit of that, they have to upgrade their systems. So that's what I'm trying to get at when these companies report over the next couple of weeks, and less concerned about what they say for the next quarter or so.
Anurag, just 20 seconds here, 30 seconds ahead of Microsoft this week. Anything you're top of mind here?
Yeah, same thing. I think that the body language is very important about cloud usage and what kind of guidance they give for the second half of this year, and perhaps even some early indications of next year.
All right, so appreciate it. A deep dive in setting us up so well, talking Salesforce, talking Microsoft, and so much more. Anurag, thank you so much. Bloomberg Intelligence Senior Software IT Service Analyst Anurag Rana joining us on the phone from New Jersey. Shares of Salesforce, by the way, they're still up about 3% here.
We've given back some of this rally that we've been seeing, Carol. The S&P 500 up 0.9% right now. The Dow up 0.5 percentage point. The Nasdaq still the leader of the pack, up 1.7%.
It's like all of a sudden investors got the memo. Hey, we got some big earnings this week.
Yeah.
Maybe
we're
this
just like at the beginning of earnings season.
Later on, I'm going to tell you I did a poll top of mind this week.
I voted in
it. But I know where you would
Am I allowed to?
Yes.
All right, I voted.
All right, let's get to world and national news. Right now, Nancy Lyons is over in D.C. Hey, Nance.
Thanks, Carol. Ukraine and its allies are pressing the Germans to send Leopard tanks to help with Russia's invasion.
The United States is sending Bradley armored vehicles, and Britain is contributing tanks. Kay Bailey Hutchison, former U.S. ambassador to the North Atlantic Treaty Organization, said in a Bloomberg interview.
We have offered almost 150 of the fighting vehicles and then asked the Europeans to provide the Leopard, which is suited for this type of warfare. We need Germany, and I hope that they will do it.
Hutchison added that Ukraine is also asking for aircraft and should get them sooner than later. In Washington, Irv Chapman, Bloomberg Radio.
The death toll in Monterey Park, California is now up to 11, with officials saying another victim has died of their injuries today. A gunman stormed a dance hall over the weekend during Lunar New Year celebrations and started firing. White House Press Secretary Karine Jean-Pierre says President Biden is keeping track of all of the investigation.
Our team continues to be in regular contact with law enforcement officials leading the response, and the president has been briefed today on the latest developments.
Jean-Pierre says flags have been ordered to fly at half-staff. U.S. drug regulators are setting out a plan to update COVID-19 vaccines, sort of like they do for the flu. It would include annual assessments as well as annual shots. Dr. William Schaffner is an infectious disease professor at Vanderbilt University. Dr. Schaffner says it's not a matter of should we do this, but how we do this. The FDA plan is to meet each June to review virus strains and to select which one to use in shots that would be deployed no later than September of every year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. I'm Charlie Pellet. Tech stocks are leading the gains. We check the markets all day long on Bloomberg with the S&P up now by 39 points at 4,011, holding above 4,000, up by 1%. NASDAQ up 195 points, up 1.7%. The NASDAQ 100 index up now by 1.9%. The Dow's up 192 points, up 0.6%, with the 10-year yielding 3.51%. 2-year yield 4.22%. Spot gold up $4 the ounce to $19.30, up 0.2%. West Texas Intermediate crude oil, little change, down 4 cents now, 81.60 a barrel, down by less than 0.1%. Despite all of the job cut announcements, especially in technology, economist Julia Coronado, the president and founder of Macro Policy Perspective, says companies have been reluctant to let workers go given labor shortages.
They're going to be very strategic in their workforce management. They're not going to just quickly turn to layoffs as soon as revenues moderate or get or margins get squeezed. They're going to hold on to those workers because it was so hard to staff up in the last couple of years that they are really going to be more reluctant to turn to layoffs, and that could be a source of resiliency for the broader economy.
Well, a week ago, Microsoft said it was laying off 10,000 workers. Now Microsoft is making a multi-billion-dollar investment in OpenAI. That's the pioneering artificial intelligence research lab behind ChatGPT, as the software giant looks to more closely tie these text and image generating programs to its offerings. Microsoft ahead of earnings tomorrow, up 0.8%. Wayfair shares surging again today as recent moves to cut costs spur upgrades from at least 3 analysts. Wayfair rallying today by 26.4%. Recapping the S&P up 37, up 0.9. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. See if your small business is eligible for employee retention credit assistance with the team at Innovation Refunds. They help make the process easier and less stressful so you can focus on your business. Learn more at getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, just about 17 minutes left in today's trading session. The first, of course, of the week. We know the Fed members are in blackout period as they count down to that first 2-day Fed meeting of the year and that first Fed decision. Stocks are just rolling over, as we heard from Charlie. But, you know, Tim, we still have, when it comes to outperformance, those tech names.
Yeah, we're seeing the NASDAQ higher by 1.7% right now. Let's get into it with Mike Liss, Senior Portfolio Manager at American Century Investments. American Century Investments has about $209 billion in assets under management. Mike joining us this afternoon from Kansas City, Missouri. Mike, how are you?
Great. How are you guys today?
We're doing pretty well, trying to make sense of this rally. So is this a false start, or does this thing have legs?
Well, you have to think about the starting point. And so last year was a difficult year for the market in general. Myself as a value manager, and from where we're starting, we think we're starting from a pretty good point here. Last year, just to do a little bit of rewind, there was a 3 standard deviation difference between the valuation spread between value and growth. So that was a tremendous opportunity, but that came at the expense of 5 very difficult years of underperformance of value versus growth. Fast forward to this year, and we still think it's a decent starting point for value stocks and value style of investing. It's down to about a 1 standard deviation difference in the disparity between value and growth.
All right. So what way would you play it, though, then? Where specifically would you want to be looking at to invest some money in?
Yeah, Carol, so how we're positioned today, we are overweight banks. That's our biggest overweight. We're still overweight energy. but we have reduced it tremendously. We had almost a max overweight in 2021 and into 2022, and it's a modest overweight. And wherever we redeployed it to multiple sectors that had underperformed in 22, including tech and REITs. We're not overweight tech and REITs, but we have reduced that underweight quite a bit because we've seen some risk rewards really start to open up. Additionally, we still see some good value in pharma and healthcare equipment and providers. And then we still see some value in electrical equipment industrials and some industrial conglomerates as well.
Okay. What's appealing to you about those sectors? Like, why? Let's start with pharma because it's been getting beat up this year.
It has been. It had a good year last year. So some of that, Tim, is probably a reversal of that outperformance, and you see it today. You've seen it really since the beginning of the year as growth has outperformed value. But what we see in pharma, we see good companies with high returns on capital, strong barriers to entry, good balance sheets to go with it. So we see several good risk rewards within the pharma industry.
All right, so let's go into pharma, or more specifically medical devices. And I'm thinking of Medtronic. MDT is the ticker. It's up just shy of 6%, has a 3.3% gross yield in terms of its dividend. What specifically about this name? Why are you interested?
So there's a lot to like about Medtronic. Roughly a third of the company is cardio, about 25% is surgical supplies. Roughly another third is neuroscience and spine. And the company has high returns on capital. They have leading market shares in most of their end markets, and they're very high barriers to entry. They have a strong balance sheet, which we look for in companies, and it's underperformed due to what we consider to be transitory issues. We think that these transitory issues will reverse, trading at a modest valuation and a dividend yield of about 3.5%. We think it's a good risk reward for our clients.
In other words, just a classic value play here. I mean, it sounds like that's what you're saying. What about when it comes to Truist, TFC, Truist Financial Corp?
Yep, Truist is one of those banks that we like right now. And banks are out of favor. They didn't perform well last year. But the banks that we're focusing on are banks like Truist that have a lot of capital, so that should we go into a slowdown or even to a recession, they'll be in good shape to withstand that. What we like about Truist is their footprint. They are basically in the southeastern U.S. and mid-Atlantic region. They have a good diversified fee income structure. About 40% of the revenues come from fees, 60% from traditional lending. They outperform in Fed stress tests, and it's trading at a modest valuation. And again, a 3% plus dividend yield. We think it's a pretty good risk reward here for our clients.
Interesting. Yeah, as you mentioned, that dividend yield, and I do feel like there's a commonality. I do want to mention, you said Medtronic. Medtronic was one of the 50 stocks to watch. That was in Bloomberg Business Week, and it was also a Bloomberg Big Take, where our BI team, our research team, puts out 50 names to watch, some of it for good reason, some of it for bad. But Medtronic, they say the launch of their new treatment for high blood pressure could be the prescription needed to reinvigorate growth.
Okay. Hey, Mike, just one more minute with you. Curious about what your thoughts are on the macroeconomic environment. I mean, if we look across the landscape right now, here in the U.S., it seems like the equity markets are at least saying, we think the Fed can pull this off. Do you agree?
Yeah, it's tough to sum up the macro in a minute, and just to say, we are
complicated.
So we're macro aware, but we're bottom up investors. That being said, look, I'm like everybody else. I have my thoughts on the macro as well, and it is so mixed right now. Are we headed into a recession? I don't know. It's pretty obvious that we've slowed down from the data. Whether you look at the soft data or the hard data, we have definitely slowed down. It doesn't seem clear to me that we are definitely going into a recession, and if we do, it might look more like 91 or 2001 rather than 2008. You've got lots of positives, like a strong job market, consumers still spending, China's opening, and inflation slowing. But the negatives are rates may have to stay elevated for a while. Housing's a drag, the PMIs are contracting, and you have elevated geopolitical concerns. So it is very confusing out there, lots of cross currents.
Well, hey, that was a minute, and that worked. Don't sell yourself short.
There's a lot going on. I like the idea of cross currents. We see that continuing. Hey, Mike Liss, thank you so much. Senior Portfolio Manager at American Century Investments, roughly $209 billion in assets under management. Joining us on the phone from Kansas City, Missouri, or Missouri, depending on how you'd like to say it, on this Monday. Carol Masterton Stanovic, we are Bloomberg Business Week.
It is 3:53 on Wall Street. Charlie Pellet with today's company headlines. We're learning more about Apple's long-anticipated mixed reality headset. Bloomberg's Mark Gurman says it's an ambitious attempt to create a 3D version of the iPhone's operating system with eye and hand tracking systems that could set the technology apart from rival products. The roughly $3,000 device is due out later this year under the likely name of Reality Pro. Apple shares are up today, part of a broad tech rally. Apple up by 2.4%. Xylem is buying Evoqua Water Technologies, bringing together the treatment companies in a $7.5 billion all-stock deal designed to address growing concerns around global water scarcity. Makers of pumps, filters, and other treatment system technologies are gaining prominence in some corners of the investing world amid a heightened focus on access to clean water. Xylem, though, down today by 8.3%. Evoqua Water Technologies, which uses the ticker AQA Aqua, up by 15%. Wayfair shares out of Boston surging again today as recent moves to cut costs spurred upgrades from at least 3 analysts, 2 of which went from bearish views on the stock to bullish ones. The upgrades come after the household goods-focused e-commerce company last week said it would cut about 10% of its workforce. The move is expected to help Wayfair move toward profitability. Wayfair up now by 26.9%. Those are the company stories we're following this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just a few minutes left in today's trading session. In just a moment, we're going to head over to our TV colleagues and count it down to the closing bell on this first Monday of the trading week, in a week that's going to be full of a lot of big name earnings, including Microsoft, Intel, and a few others, including Tesla.
Oh, good segue.
Yeah.
Well, as I mentioned a little earlier in the program, there's a securities trial going on about none other than Elon Musk. It stems from that 420 take private tweet just a few years ago. Elon Musk, the latest is that he testified that Saudi Arabia's sovereign wealth fund, quote, unequivocally wanted to take Tesla private in 2018, a core element of his defense to claims that his tweets about the take private plan misled shareholders.
Yeah, there's a bunch of headlines crossing the Bloomberg. Calls funding secured tweet absolutely truthful. That was at about 3:24 today. I mean, they're coming fast and furious. I'm just looking at what else. Calls Tesla securities fraud lawsuit, quote, unquote, outrageous. So this is coming, I guess, as he's up on the stand there. But it is kind of interesting. I mean, the shareholders, if you don't recall this, they are contending in a class action that the tweets were lies that cost them big losses from wild stocks price swings over a 10-day period before the plan was abandoned, before he, basically backed off, I guess.
As he resumed testifying Monday after a brief appearance on the witness stand Friday, Musk told jurors that he had discussions with the Saudi Public Investment Fund about the transaction. He said the amount required for the fund was, quote, potentially less than $10 billion. Court filings indicate that Musk himself owned about 19% of Tesla at the time. The billionaire would have needed to raise more than 50% to take the company private.
Yeah, I mean, this is going to be tricky, right, in terms of, I guess, what they have to prove, his intent, I guess?
Yeah, and,
kind of get into his mind of, like, where he was?
Yeah, and I also read from our live blog earlier, Carol, that the judge told Elon Musk that he, wasn't answering questions earlier. Some observers said he actually appeared tired on the stand in recent days.
Yeah.
Which makes sense. He runs, 4 companies?
Yeah, he's kind of busy. He did disclose when he first arrived in court that he had had a bad night's sleep, which is why you should check out the Pursuit section of Bloomberg Business Week magazine, because it's all about the business of sleep. And he did seem to grow wary by his second hour on the stand. Again, see, it's all connected.
Gotta get your sleep.
The business of sleep, guys, it's a lot. All right, it is time to check in with folks that we know had a good night's sleep. We're talking about our TV colleagues. We're counting you down at the close on this Monday. Beyond the Bell starts right now.
As we take it to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are about 2 minutes away from the end of the trading day. Romaine Bostic, Katie Greifeld, we're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Massar and Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio Quick Take, as well as on YouTube. Carol, you're buying into this rally?
TBD.
TBD. Well, 2% pretty much across the board on this day. And look, we were just talking about it. Semiconductor names just leading the charge here.
Well, that's where I wanted to go.
Yeah.
I mean, if you're looking for some outperformance, we know it's broad-based. We talked about conviction behind this rally. It's not just one day. We're definitely feels like there's getting some momentum. If you look at the stocks, it's up about 4.8% off its highs, but nonetheless, in the last couple of days, you're talking about a 7 to 8% outperformance. And if you look at some of the best performing names in the NASDAQ as well as the S&P 500, in fact, the S&P, Advanced Micro, you've got Western Digital, you've got Seagate, you've got NVIDIA, all of these, Qualcomm, they are your top gainers in today's session, Tim.
So I kind of put this question to Mike Liss, Senior Portfolio Manager at American Century Investments, just a few minutes ago. I asked him what the equity market is pricing in terms of a recession, in terms of what 2023 looks like. And he said, look, it's just too mixed when it comes to the macro. The question of whether or not we're headed into a recession, he just can't answer right now. What he did know, though, is we got a lot of, positives going for us, right? We got a strong jobs market. We got inflation slowing. We got consumers still spending.
Yeah.
But there are concerns, including geopolitical concerns. We got the Fed keeping rates high. So if we do go into a recession, he said what a lot of our market participants have said, it's probably going to be a pretty shallow one.
Well, that gets sort of
a pretty shallow one here, of course, as we get the closing bells here in New York. All around great day here, extending some of the gains, of course, that we saw last week. A Dow Jones Industrial Average, it looks like it's going to finish the day higher by roughly about 260 points, or 0.8%. The S&P 500 going to finish the day higher by more than 40 points, almost 50, right around 4,019 and change, up about 1.2% on the day, which again pushes it with a close above that 200-day moving average. And the NASDAQ Composite higher by 200 points or 2% on the day even here. And the Russell 2000, Carol, getting in on the action up by 1.2%.
Yeah, another top performer is Tesla, and of course they've got their earnings later on this week. Katie, S&P 500, you've got 394 names gaining ground today, 107 lower, 2 unchanged.
And you look at what that means on an industry group level. Up at the top, you have autos. We know a lot of that is Tesla. Then you have semiconductors. We know that's really a broad rally. Some of that, though, is NVIDIA. So AI, EVs, feels very 2020. But you look down the list, and again, this is a big, broad rally. At the bottom, you do have telecom. You do have energy. Some of the names in the red here. But overall, Carol, a really healthy breath in terms of what the market is doing today.
Yeah, it does definitely feel like a big-time risk-on trade here. All right, so let's get to some of the gainers. I had a lot to choose from. I'm going to stay with the chip space because AMD was your #1 gainer in the S&P 500, also top in the NASDAQ 100. A gain of pretty much at its best levels of the session, so that's more than a 9% gain. Thank you, Barclays, because they put out a report this morning detailing an outlook for semi companies in 2023, one that is getting more positive with upgrades and more optimistic price targets for some of the big names, including AMD. So check it out. There was a lot of details, but nonetheless, certainly some outperformance for AMD today. Wayfair continuing unbelievable run in the last couple of days. It's up roughly 50% in the past 2 days. B of A, JP Morgan, Wedbush, all upgrading the stock on continued move to cut costs. Remember, on Friday, Wayfair was announcing it was cutting about 10% of its workforce. 2 of the analysts going from bearish views on the stock to bullish ones, both JPM and B of A upgrading the company by 2 notches. It's now up roughly 77, 78% so far this year. And then I want to mention Rivian. It too was top of the NASDAQ 100, leading the rally with the biggest gain because we saw EVs. Tim talked about this earlier. Really, investors, of course, pushing this group up higher as well. Rivian, you can see it's up about 11.5% in today's session. And this, as I mentioned, the whole group just trending higher today. I mean, it really just feels like you could just throw paint everywhere at stocks, and just about everything was gaining.
Yeah, that's why it was kind of hard for me today to find some decliners. But there's some M&A news that's bringing down the worst performer on a percentage basis in the S&P 500. Xylem, it's the water technology company that said it's going to acquire Evoqua Water Technologies in a $7.5 billion stock deal. Investors responding by sending shares of Xylem lower. Lowest, or worst day, I should say, in close to a year. And then Synchrony Financial finished the day down by 2.4%. The credit card firm reporting fourth quarter results, issued guidance for 2023. The outlook for net interest margin actually was worse than the what analysts wanted to see. So that's why we saw shares down by 2.4% today. And then American Tower Corp down 2.6%. It was downgraded to sector weight from overweight at KeyBank. It was also downgraded along with Crown Castle. So another decliner there. Crown Castle moving lower. American Tower finishing it down by 2.6%.
All right, and we look at the Treasury market, which of course have been pressured all day long here, pushing yields higher, up about 6 basis points here on the shorter end of the curve, about 3 to 4 on the longer end of the curve here. The net effect is pretty much yields have been camped out where they've been for quite some time. We should point out that volume, particularly in the futures space, was pretty light here. Remember, you got a huge part of the world right now that is actually taking the week off, so that is going to have some distortion here on some of the trading that we see, guys.
I do think it's remarkable that 10-year yield, it's just been oscillating around 350 for, I don't know, weeks now. And you think about where we were really recently in October, above 4%. We've seen quite a rally in the bond space.
You know, I was just pulling up the dollar index. I mean, call it just a little bit higher, but I do also think about how that plays into sentiment as well as we get into earnings season and what that means for some of the, you know, global profits around the world and whether or not that is giving some upside in terms of the momentum that we're seeing out there.
So is the picture that all of this is painting is that, you know, the Fed could actually pull off a soft landing? We'll find out when we get commentary. Certainly, you know, not from the Fed this week as it's blackout, but when we get PCE
Well, just listen
later
to what the
this week,
companies
Romaine.
have to say. That's all you need to do. And I thought it was interesting, too. We were talking about some of the tamp down and recession calls. Of course, the idea that some of the recession models over at JP Morgan have basically said maybe not quite as severe as what they had been modeling before. The idea you heard from Mike Mayo over at Wells Fargo, who talked about that when you listen to what the bank said, there's really no evidence there of a recessionary environment that they're in here. And I think some of the individual companies, even though they're under stress, that doesn't necessarily mean that we're talking contraction. It just means that maybe the growth story isn't going to be as high.
Well, two things about that. One, under stress, you know, it doesn't necessarily mean that, you know, we have to take these layoffs in the context of all the hiring that these companies have done over the last couple of years.
Yeah.
And then if we think about this from the perspective of companies that can tell us about, you know, how the consumer is, there's sort of no better version of that this week, at least, than MasterCard, and telling us, you know, hey, how consumers are spending their money because they see it, you know, day in and day out.
Well, I mean, we had for some of the credit cards. We had Synchrony, of course. We had Ally last week, as well as Discover. And I think it's going to be kind of a mixed bag, right? Because some of these, I think, payments companies are going to do a little bit better just because of the type of customer that they cater to.
And these specific earnings stories that we're talking about, I don't know, it gets back to the conversation of what is actually driving this market. Is it the macro or is it the specific earnings story? For, you know, the better part of the last several months, it's been the macro. Maybe we see that handoff this week when we really get into the heart of earnings season.
I think that's really interesting, Katie. I mean, the sentiment shift that all of a sudden it feels like in the equity market, it feels pretty dramatic. And this goes to, I think, Romaine, you asked me earlier, do I buy it?
Yeah.
And I do agree with you that it's really interesting to hear what we get from these companies in terms of quarterly reports, what they say about commentary, because that will maybe give us some idea of really ultimately how this year plays out.
Do we care about some of the second? I mean, we always mention Tesla and Microsoft, but we got, of course, GE, 3M, J&J. I guess kind of the old school industrial type of economies that companies that we used to look to as being a read on the economy. Do they not necessarily have that same, I guess, predictive power anymore?
I guess it kind of depends on who you are. If you're talking about from a benchmark perspective, maybe not. If you actually are an individual investor, or rather an active investor, maybe not necessarily in these cap-weighted benchmarks, you would care a little bit more.
I would say GE, not even close to, you know, the weight that we used to put on it when it, you know, had so many different sectors, Romaine, when it was in financial services, when it was truly in industrials earlier. You know, it mattered a have more.
I have a question for you, Carol Master. So what do you think of this?
Not to be confused with Carol Brown, right? Because there's two Carols on this.
I have no idea who you're talking about, but okay. Anyway, Carol, wait, let me get this right. It's Carol, Tim, Katie, Romaine. Because I'm not sure who the fifth person is you're talking about. There's only four of us on screen right now.
But you use my
Are we all on the same page?
No, go ahead. Go
I want to hear this question.
Go ahead. Now I want to know.
I think I forgot my question now.
No.
How do you feel about the new M&Ms? How about that for a
Well, okay, thank you. It's like we're...
Oh, you were waiting for me to ask that?
So I put top of mind this week. I put out a Twitter poll. Tesla earnings, Microsoft, Intel earnings. That's one choice.
Okay.
PCE or the drop of the M&M spokes candies. Do you want to know what won?
That was Twitter, so I assume it's M&Ms.
The drop of the M&M spokes candy.
I didn't know that they were
33%.
dropped. I've been piecing together what
I mean, how can you drop them? I mean, they are the candy, right? Are they replacing what's in the bag?
Apparently, I guess you change the shoes and everybody gets, I don't know, there's been like all this online drama. But some are speculating that maybe this is just a lead up to the Super Bowl ad.
Oh, Super Bowl. What are they going to do in the Super Bowl?
Well, well, exactly.
Is this like when they killed Mr. Peanut? Do you guys remember
that was pretty traumatic. I don't think I've eaten peanuts ever since.
Hey, I voted for PCE.
Yeah.
That's what I thought would be sort of like, among the biggest events of the
So
week.
you were the one vote on
I was the one
PCE
vote
there.
for PCE.
That was a tie with Tesla earnings.
Okay,
cool.
With a tie.
Right.
Okay,
Rah,
that's
rah,
pretty
rah.
fitting there.
Was M&M candies really your question or no? Or did I really mess up your mind?
You messed up my mind, but now I got to tune into the Super Bowl because I want to see what happens. Maybe they kill them off. Maybe they bring them back.
Go Birds.
Who knows? Maybe they get ChatGPT to just do it for them. Who knows?
So much speculation. All right, that's
These
a
are
wrap.
candies, right? I'm just,
Yeah, they're
double
candies.
checking. They're not actually people.
No, and I don't think Mr. Peanut is a real person either.
Well, he's dead.
Is this another
Well, he
just
did have
part
a
of?
mister in front
Is
of
this
his
just
name,
part of
so-
the job cuts that are going on around the world?
I don't know. I feel like this conversation's gotten really off track.
Faith's going to yell at us in
Yeah.
just a moment. All right, that's a wrap. Our
We are a
cross-platform
market
coverage.
show, right?
Shh. Radio, TV, YouTube, Bloomberg Quick Take. We will be back with you for Beyond the Bell, same time, same place
It's
tomorrow.
going to be a long week, Carol.
It is. Will you be when the earnings come out for the energy section? Because there's a lot of earnings coming out. We talked about Microsoft, Intel. We've got Tesla, but it's also going to be a big week when it comes to big oil and their quarterly results, Tim.
Yeah, the energy sector, as you know, has been hands down the outperformer in the equity space. Carol,
What?
up 130% as a group overall over the past 2 years.
And with conviction, like no doubt about it. Everything else was just getting killed, but not the big oil.
And Cole Smead last week telling us that's going to continue.
Right, and this is why it's going to be interesting to see what our next guest has to say. Back with us is Stuart Glickman. He's head of energy research at CFRA. He's joining us via Zoom in New York City. Hey, it's so good to have you back with us. We are, everybody's talking about big tech and all these other things. Energy, it's been such a performer the last 2 years. What kind of earnings are we going to get, and will that provide more momentum when it comes to their share prices, in your view?
Hi, Carol. Thanks for having me.
Yeah.
So, year over year, energy earnings are going to be improved. So they're not going to be massively improved because last year, fourth quarter of 2021, oil was averaging about $77 a barrel. Fourth quarter of 22, about $83 a barrel. So you're going to see a modest year-over-year uptick, just simply based on pricing alone. Where I think people need to recognize it's not going to be quite as robust as we've seen in recent periods is because second quarter and third quarter of last year, oil prices were considerably higher, and so were natural gas prices. So the bloom has come off the rose a little bit, but the year-over-year comparison is still plus.
Meaning it's just comps are going to be really, really tough because oil was so expensive in the second and third quarter last year.
Right. So sequentially, you're going to see, lower earnings, but that's okay. Still, overall earnings on a year-over-year basis, very strong. These companies are going to be throwing off a tremendous amount of free cash flow. So this is the proverbial good problem to have. What do you do with all that cash?
So what do you do with all that cash?
Good question.
I know what Joe Biden wants companies to do with all that cash.
I know what shareholders want them to do. Give
Those are
me
two
more
different-
dividends.
those are two different things.
They are. So they are trying to satisfy a whole bunch of different stakeholders. On the one hand, you've got, of course, the need for more oil, more gas to come out of the ground because demand continues to inch up every year. We have fully come back from the decline that we saw during the beginning of the COVID era. So now 2023 demand for oil looks like it's going to be ahead of where 2019 was. But by the same token, a lot of institutional investors have gotten really accustomed to really strong buybacks, dividends, and so I think those are going to continue as well. Not to mention, you have the ESG crowd that is interested in seeing more money being allocated towards low carbon solutions and things of that nature. So they are juggling a whole lot of balls in the air. My guess is that fossil fuels, as we typically think of them, probably garner maybe a third to maybe at most 40% of that incremental cash flow. And the rest is going to those other areas that I mentioned.
All right, so Tim just said to me, wait, did he say drill, baby, drill? What's interesting is, Stuart.
I didn't hear him say drill.
We didn't hear that.
Not saying that.
I mean, what's funny, and you talked about Tim Cole Smead when he was on,
Yeah.
and we got into it. I mean, is it the reason we will continue as investors, or investors will continue to find opportunities in the big integrated oil companies and the fossil fuel companies, is that because supply demand will still play to their favor investors' favor for a while because the renewable space it's not ready yet to take fossil fuels' place.
Right. So I think that renewables definitely has a place. I think renewables is going to be eating market share out of what fossil fuels has historically commanded. But the Achilles heel of renewables is intermittency. You can't always count on the wind blowing. You obviously can't count on the sun shining all the time. And storing power that's generated from renewables is very hard to do for a long period of time. So until you have that holy grail where you can solve that technological problem, fossil fuels have to remain a big part of the energy consumption mix.
Right.
And I think that's why these firms have to continue doing what they're doing to some degree because energy demand is inching up every year.
At the same time, even though that demand is there, these energy guys, right, Stuart, are being very smart. They've seen the boom and bust cycles. It happens a lot in the energy space, and they're going to be very slow to drill, baby, drill, right? Like they're going to be slow to amp up the CapEx expenditures that are needed to maybe build up supply.
They absolutely are. They have long memories. We have seen collapses in crude oil prices 3 times in just the past decade. 2014, again in 2016, and again in 2020.
That's remarkable.
So
yeah.
It really is. You have to be able to prepare for that kind of potential. And we talk about, the risk of a recession looming this year. If a severe recession hits, it is going to take oil demand with it, and then oil prices are going to fall apart. And so you don't want to be an E&P or an integrated oil that threw every dollar you have into more production capacity because you might not need it right now.
All right, we've seen that through previous recessions, previous economic cycles. So Stuart, when it comes to what we should be listening for from companies as they report earnings, we got ExxonMobil coming up next week. We got Chevron January 27th. What can these CFOs, these CEOs tell us about how they're thinking about demand and what that could tell us about the economy?
Right. So I think both of these firms, by virtue of their size, how many different activities they're involved in, are thinking out not just this year and next year, but 5 years out, 10 years out, even 30 years out. And so, when they talk about CapEx, usually they're talking about it in the context of a 5-year plan. I am interested to see how much they intend to spend at the drill bit on fossil fuels. I think that's going to be an indication of how optimistic they are about the price deck holding firm. I'm going to be interested to see how much they're going to be throwing into low carbon initiatives, and in particular, which kinds of low carbon initiatives. Are they going to stick close to their knitting with things like carbon capture sequestration, or are they going to be drifting further away from their core business and doing more things like wind and solar? Then, of course, you've got, the stuff that's near and dear to institutional investors' heart, like how much is the buyback going to be this year? How much is the dividend going to be this year? And all of this in the context of, how do you pay for all this? What does production growth look like? Most of these firms are probably going to be eking out production growth somewhere in the neighborhood of 0 to 5% for the next couple of years. So you want to know, what's going to be driving that, because
right.
it's a depleting business, right? Your assets deplete every year. What you produce next year is going to be a little bit less than what you're producing this year, unless you throw more assets into more recovery. So where are they going to be getting those extra barrels down the road? That's going to be important to hear about.
Hey, Stuart, got about 30 seconds or so. You got to buy on ExxonMobil. You've got to hold on Chevron. Exxon, you think, is poised to be the better bet for investors? Why? Just quickly.
It's really not a valuation call. Exxon's trading about a 20% discount to its historical forward average. Chevron's trading right about in line. So I think there's more bang for the buck with Exxon right now.
All right. Really appreciate the heads up and a great setup for when these two, especially the big integrated Chevron and Exxon, report this week. We've got Chevron on January 27th, and then on January 31st, we've got ExxonMobil. Stuart, thank you. Stuart Glickman, he's head of energy research over at CFRA Research, joining us via Zoom from New York City. I mean, this has just been, a group that you just couldn't go wrong the last couple of years. I love what he had to say about, the price swings. And
the comps for the second and third quarter.
Right? It's all relative.
Yeah, it is all relative. I mean, think about where we were, a little under a year ago with Russia's invasion of Ukraine and the spike we saw in oil prices then.
Right, it was such a game changer,
Yeah.
right? A big changer. All right, you're listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. The Dow, the S&P, and NASDAQ finished in the green, with tech stocks leading today's gains. Earnings for the most influential segment of the equity market about to get underway. We'll be hearing from marquee names such as Microsoft and Intel over the next couple of days. S&P up 47 today, finishing above 4,000 at 4,019, up 1.2%. The Dow up 254, up 0.8%. NASDAQ up 224, a gain of 2%. 10-year yield 3.52%, with the 2-year 4.23%. Gold up 0.3%, $19.31 the ounce. And West Texas Intermediate crude flat on the day, up just 1 cent to 81.65 a barrel. Recapping, S&P picked up 47 points on this Monday, up by 1.2%. And that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, we did promise we were going to go all in on AI today. We're living up to that. Earlier, we spoke to Ian King about how NVIDIA is Wall Street's top pick for ChatGPT mania. After all, Microsoft is investing $10 billion in OpenAI, the company behind the AI tool ChatGPT. And I do feel like, whether you look at major news, the networks, the general networks, kind of just the general public, everybody's like, wait a minute, AI is going on? I didn't realize it was that smart.
Yeah, they should have checked in with our next guest, because then they probably would have known. We're very pleased to have with us Tom Davenport, professor of information technology and management at Babson College. He's the co-author of the new book, All In on AI, How Smart Companies Win Big with Artificial Intelligence. He joins us via Zoom from beautiful Santa Barbara, California right now. Professor, good to have you with us. How are you?
Thanks. I'm great. Happy to be here.
Well, we're looking forward to going on this deep dive with you when it comes to AI. I want to start with what Carol was referring to, this idea that, GPT has been all over when it comes to sort of like the conversation, right? What we're seeing out in the environment right now with not just, the tech side of things and what happened on Twitter a couple months ago when it was released, but this idea that, hey, this incredible technology is actually out there and it's a lot closer to prime time than a lot of people thought. What have your thoughts been around all this?
ChatGPT, I've never heard of that. Could you tell me more about it?
Really?
Little joke there.
Okay, I was like,
you scared Tim.
Wow.
You'd have to be Rip Van Winkle not to have heard of ChatGPT.
But you know what?
That's so funny.
I have to say, though, up until a week or so ago, it wasn't necessarily mainstream.
I think that's true. I wrote an article for Harvard Business Review, I think in November, on generative technologies and what to do about them, and ChatGPT came out a couple of weeks later and the whole category just exploded. So I kind of wish I'd waited a little while. But yeah, I think that it's a very powerful tool, and I think it's going to have a lot of impact on a lot of sectors of business and society. I think we're going to have to train everybody how to use it, or it'll be incredibly unfair to those who do and those who those who don't.
What do you mean by that?
Well, it's a huge productivity aid. It'll get only better. And so, imagine two kids in school and one uses it for preparing essays and the other doesn't have access to it. It's just really unfair. And I think any business should be exploring it aggressively now. There are just so many different applications of it.
I want to make sure I understand this right. It seems like you're saying the person who's using it to help prepare an essay, to me, and I think to a lot of teachers or school districts or school administrators would say, that's cheating.
Well, I think we're going to have to revise that traditional expectation. It will be virtually impossible to tell. I guess the only way you could tell is if, Johnny used to write bad essays and now he writes good essays. But particularly if someone edits the output of ChatGPT or whatever generative AI tool they're using, I think it'll be impossible to tell, and really not that ultimately different from, going to the library and reading books. This is the new equivalent of that.
But does it get
capability?
Hey, Tom, do we have to think about it? It's interesting. I grew up and I had to learn penmanship. I remember practicing writing cursive. That not necessarily was the case for my daughter, because everything was being done on computers and is being done on computers. And I do wonder, is there going to be kind of, anybody, because of something like a ChatGPT or other large language models, LLMs, that it's not going to be so important to be able to write an essay because a company can have, the ChatGPT do it. So I just wonder, how does this transform our world for the better, for the worse?
Well, there are all sorts of possibilities for mischief with it. Right now, it's more the image-oriented tools that are problematic, although I have heard that hackers are already using GPT-3, the sort of parent of ChatGPT, to create malware code, since it can write code. But I think in general, we're all going to become editors rather than creators of first drafts. And will be will have to be prompt engineers, and you have to write a prompt to get these systems to produce something. We'll have to be prompt engineers instead of first draft writers, and then we'll have to edit it to make sure that the information is factually correct. Often it is not now, and that it's not, it can be a little boring at times. You might need to liven it up, but in almost every case, in my experience, it comes up with things I hadn't thought of, and I'm fairly well educated, so I think most people would benefit from it.
Does this scare you at all?
I try to look on the positive side. I think there could be some really problematic aspects, but this is with us now. It's not going to go away. We might as well get used to it. And
the cat's out of the bag.
Yeah, it's better than having chips implanted in our brain, which may happen at some time.
I was going to say that's actually, if Elon Musk has his way, that's coming pretty soon, thanks to what he's working on.
Well, it's interesting though. There's been a lot of stories about things like AI, and I think in terms of the medical community, where it can help screen in an emergency room, right, and help a doctor kind of prioritize or deal with more patients in a smart way. In the investment world, startup companies that were maybe deemed too small and not worthy of spending some time to research whether or not that they were even maybe a possible good idea, that with the use of AI, that can be used as a screening force to allow an investor to kind of look at more companies. Like, I think we have to be smart, right, with all of this stuff, that technology has its pluses and its minuses, but there are things that can maybe benefit the world more broadly.
Oh, yeah. Huge potential applications in healthcare, although the adoption in clinical practice has been quite slow. Once a week you get an announcement of research that says that an AI system is as good as or better than a radiologist or internal medicine specialist at detecting some ailment. So, lots of potential value, and I think it's going to change a lot of jobs. I don't think yet it has reduced employment much outside of maybe robots in manufacturing. But the people who are going to lose their jobs will be the ones who refuse to work with AI.
Well, Tim, you and I were talking about in terms of the healthcare community, right? Like, you think about all the research that gets constantly, done, and results and, papers and stuff. Like, how can a doctor who's taking care of patients possibly read it all? So you think about if AI can be used as a tool to help screen through some of this. I mean, think about the benefits of it.
Yeah, I mean, I think that's really important.
Looking at cases.
But I also think, one of the problems is what Professor Davenport talked about. And it's the idea that, okay, well, you can use ChatGPT to also, create malware or write malicious code. There's sort of two sides to every coin, Professor. So do you think there needs to be any sort of regulation of this type of technology?
I think that for the moment, individual organizations will have to decide, what's our policy on this. Schools, as we were discussing earlier, I don't see the U.S. government regulating it effectively anytime soon. Possibly we could see something in Europe, although I think this is going to be really difficult to regulate, even for highly regulatory societies. And I think we've already seen apparently some student who used to work for OpenAI has come up with a system that detects whether or not a passage was written by ChatGPT. So, maybe we'll have a sort of ongoing arms race in that regard.
Hey, we're going to come back with Tom Davenport, Professor of Information Technology Management at Babson College. His book, he's a co-author on the book entitled All In on AI, How Smart Companies Win Big with Artificial Intelligence. And in the book, gets into some cases, whether it's a Disney, a Walmart, a Capital One, a Pfizer, and Eli Lilly, how they've been using AI. So we'll talk about that on the other side.
Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. They may be able to help your small to medium-sized business qualify for ERC assistance. What's the ERC? It's a tax credit for the sacrifices businesses made for keeping employees on payroll during the pandemic. Let Innovation Refunds help you grow your business. They don't get paid unless your business receives its refund. Learn more at getrefunds.com.
All right, coming up, we're going to continue, as we said, with Tom Davenport. Talk a little bit more about AI, how it's already being used. And that's why it's interesting, Tim. It's out in our world. I feel like we throw the term, I feel like the term AI just kind of loosely, but maybe we'll get a little bit more into the specifics of it.
Looking forward to that. In the meantime, to world and national news we go to Nancy Lyons in her 99.1 studio in Washington, D.C. Hey, Nance.
Thanks, Tim. Attorney General Merrick Garland says his office is staying above the political fray while investigating the handling of classified documents by President Biden and former President Trump.
The role of the Justice Department is to apply the facts and the law in each case and to reach appropriate decisions in a nonpartisan and neutral way without regard to who the subjects are. That is what we've done in each of these cases, and that is what we'll continue to do.
Attorney General Merrick Garland was speaking at a news conference on reproductive freedoms. He calls the decision to overturn Roe v. Wade a devastating blow. 4 members of the Oath Keepers have been convicted of seditious conspiracy in the January 6th Capitol attack. It's the second major trial involving far-right extremists accused of plotting to forcibly keep President Trump in power. Weeks ago, a different jury convicted 2 leaders of the extremist group in connection with the insurrection. An 11th person has died of their injuries following Saturday's mass shooting in Monterey Park, California. The 72-year-old killer took his own life once authorities tracked him down. President Biden is set to name Jeff Zients as his next White House chief of staff. This is according to people familiar with the matter. Bloomberg Government's Emily Wilkins says Zients was the administration's former COVID-19 czar and served as the director of the National Economic Council during the Obama administration.
He really does have sort of the economic background that is needed to deal with some of these big fights that are coming up with Republicans. Zients is expected to take the wheel after Klain leaves. That will be after February 7th, which is when Biden will be giving his State of the Union address.
Again, that's Bloomberg Government's Emily Wilkins. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. I'm Charlie Pellet. This update brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Even if your small business only had minor setbacks during the pandemic, you could still qualify for a payroll tax refund. Provide the tax experts at Innovation Refunds with some basic information and let them calculate the amount you're eligible for. Learn more at getrefunds.com. Tech stocks led today's gains with earnings for the most influential segment of the equity market about to get underway and a test of the S&P 500's 12% surge from its October low. Mike Liss is Senior Portfolio Manager at American Century Investments. And right here on Bloomberg Business Week, he told us this is a tough market to call because of many conflicting signals.
You've got lots of positives, like a strong job market, consumers still spending, China's opening, and inflation slowing. But the negatives are rates may have to stay elevated for a while. Housing's a drag, the PMIs are contracting, and you have elevated geopolitical concerns. So it is very confusing out there, lots of cross currents.
S&P up today by 47 points, closing at 4,019, up 1.2%. The Dow up 254, up 0.8%. 2% gain for NASDAQ today, up by 224 points. 10-year yield 3.51%. Spot gold up $5 the ounce, a gain of 0.3% to 1931. West Texas Intermediate crude down 2 cents, little changed, 81.62 a barrel. Semiconductor stocks extended gains today as Barclays capital analysts upgraded ratings on AMD, Qualcomm, and Seagate Technology. AMD surged 9.2%. Qualcomm was up by 6.6%. Seagate up by 6.6% as well. Recapping, the S&P up 47, up 1.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, along with Tim Stenovic, live in our Bloomberg Interactive Brokers studio. Tim just reminding me, I've been saying ChatGPT. Where the hell did I come from?
GPT.
I know, GPT.
Potato, Carol. Tomato, tomato.
It's just coming out of my brain weird.
Maybe if you had more experience with AI, you wouldn't have made that mistake.
Maybe if AI was running me, I wouldn't make that
That
mistake.
is definitely true.
All right, let's get back to our guest, Tom Davenport, Professor of Information Technology Management at Babson College, co-author of the book All In on AI, How Smart Companies Win Big with Artificial Intelligence, still with us via Zoom from Santa Barbara, California. You know, Tom, one thing I do want to go back to, and it's funny, in the break, I went and actually was doing some additional Googling and searching, came across a 2018 story by Ardina Bass and a colleague on kind of what is artificial intelligence, not so long ago. When we think about artificial intelligence, it sounds so sci-fi, if you will, but it's really not, is it?
No, it's in a lot of devices that we use every day. I don't think there's anything terribly mysterious about it. It's just using technology to do things that were ordinarily just done by the human brain. And I suppose arguably we've been doing that since, calculators did long division for us.
Who's doing this really well? A lot of the attention has gone to Microsoft because of its huge investment in OpenAI and ChatGPT. But what companies are deploying this technology really well?
Well, we focus in the book on not on the digital native companies because, it's relatively easy for them. They've been doing it for a while. They didn't have a kind of a technical debt, a base of previous technologies that they had to deal with. They didn't have to persuade people that it was important. So we found a variety of companies in different industries in consumer products and retail. There's Unilever, Kroger, quite good at this.
Are they using this to help identify what demand is going to be in a certain area of the country based on weather,
in every
or flu?
area? Yeah, in every area of the country. Basically, Kroger does a prediction of every SKU, every stock keeping unit in every store every night to make sure they don't have stock outs and that they get the product to the store. So that's just too much data to ever do well with a human brain, so you have to use machine learning to make those kinds of predictions. And they're quite successful at it. They do over 1 billion loyalty offers a year based on what they think you might want to buy if you're a member of their loyalty program based on what you bought in the past. So they're really good at it. Of course, some banks, Capital One, historically the most analytical bank, and I think probably the best, certainly for its size, at AI. Shell, Airbus, Elevance Health, which used to be Anthem, is a health insurance company that's really focused on this. And then in Canada, Loblaws, the largest retailer in Canada. A couple of banks we found, Scotiabank is quite good. DBS Bank in Singapore, really fantastic, and
Okay,
really
so
the
quite a
best
few.
company. Yeah, yeah. I mean, less than 1% of companies, I'd say, but a good number.
But a lot of the big ones we've heard of.
Well, and what's interesting is you shared with our producer, Paul, over the last 5 years, companies integrating AI extensively throughout their organizations have experienced stock prices averaging 4 times the performance of the S&P 500, yet this AI-fueled group accounts for less than 1% of large companies. So a little perspective. Where's this research? Who did this research in terms of the share prices?
That was done by Deloitte. My co-author is the head of AI for Deloitte.
So why do you think that's happening?
Well, AI pays off. It means that you have better pricing of your products, better offers. Increasingly, AI is embedded into products and services. We talk about Morgan Stanley using it for quote, next best action for their financial advisors to their clients. Some companies, I think, probably couldn't even do what they do at all. We talk about a small to medium-sized company called CCC Intelligent Solutions that can give you, through companies like USAA, can give you an estimate of what your crashed car will cost to fix in less than a minute based on image recognition and AI and a vast amount of data.
I also feel like, when we talk about anything data related, Tom, is that the data is only as good as the input, right? And we've talked a lot about bias, in terms of in data. And we talked about this a lot coming off of the death of George Floyd and lack of diversity within our world. I mean, it's been a continued story for many, many years. But now that data is involved, you do worry about how things are skewed. How do we ensure that AI is pure?
Well, the best companies now, you have to move beyond the kind of proclamations that we're going to be, responsible with our AI and a few policy statements. We talk in the book, for example, about Unilever, which reviews every AI application before it's developed to make sure that it's transparent and fair, not biased. They have a policy that you can't really make any final decision for a customer or employee or partner without a human being involved, and they make sure that that happens before they build the application.
Does that work?
It has. It turns out, we keep hearing the same bad stories of highly biased programs like the Amazon one that had a preference for male engineers. We hear them over and over again. Unilever's only had 2 out of over, I think, 200 that really violated their policies, and they had to go back and redo them.
All right, we're going to leave it on that. Hey, listen, Tom, thanks for sticking around. We were looking to do a deep dive into it since it feels like everybody's talking about ChatGPT, now that I remember how to say it. But it does feel like all of a sudden AI, it's getting a lot of attention, and it helps to really kind of understand exactly what's going on. Tom Davenport, Professor of Information Technology and Management at Babson College. His new book, All In on AI. He's co-author. All In on AI, How Smart Companies Win Big with Artificial Intelligence. Joining us via Zoom from Santa Barbara, California. What are you thinking?
I'm thinking this is going to be a serious challenge for parents, for teachers. I still think about the academics of it. And also, I mean, if we don't learn how to write papers because we're not needing to write papers anymore, we just need to edit them, what does that do for the foundational knowledge that you need to communicate?
Well, didn't somebody say that they're going to now have kids maybe one way around is they have to write essays by hand?
Going old school again.
I didn't even have to
do that. Actually, I did.
All right, you're listening, watching Bloomberg.
It is 4:53 on Wall Street. I'm Charlie Pellet with a look at today's company headlines and the week since the ChatGPT artificial intelligence tool took the world by storm. NVIDIA has emerged as Wall Street's preferred pick for traders seeking to profit from its potential. The chipmaker's stock has rallied about 22% in the first 3 weeks of the year. The rationale is simple. NVIDIA dominates the market for graphics chips designed for complex computing tasks needed to power AI applications. Today, NVIDIA rallied another 7.6%. We're learning more about Apple's long-anticipated mixed reality headset. Bloomberg's Mark Gurman is reporting it is an ambitious attempt to create a 3D version of the iPhone's operating system with eye and hand tracking systems that could set the technology apart from rival products. The roughly $3,000 device is due out later this year. Today, Apple shares advanced 2.3%, all part of a broad-based tech gain. Wayfair shares surged again today as recent moves to cut costs spurred upgrades from at least 3 analysts, 2 of which went from bearish views on the stock to bullish ones. The upgrades came after the household goods-focused e-commerce company last week said it would cut about 10% of its workforce. Today, Wayfair was up another 26.7%. Spotify is planning to cut about 6% of its employees, joining a slew of tech companies from Amazon to Meta Platforms and announcing job cuts to lower costs, up today by 2.1%. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. To world and national news we go with Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The Justice Department is doing what it can to limit the damage, as Attorney General Merrick Garland describes it, resulting from the Supreme Court decision reversing the universal right to abortion. Bloomberg's Irv Chapman has more from Washington.
The department, Garland said, is suing states that try to prevent medical procedures that are still lawful and is defending the right to ship the federally approved medical abortion pills interstate.
Few choices are more significant and personal than whether and when to have children, and few rights are more central to individual freedom than the right to control one's own body. An essential component of women's liberty in this country.
Garland convened a meeting of lawyers from every unit of his department to brainstorm on what additional measures can be devised. In Washington, Irv Chapman, Bloomberg Radio.
2 students are dead and a teacher is hurt following a shooting today at a school for at-risk students in Des Moines, Iowa. 3 people have been taken into custody by police who are describing the incident as a targeted shooting. A candlelight vigil will be held in Southern California tonight to honor the victims of Saturday's mass shooting. Today, an 11th person died from their injuries. The gunman entered the Star Dance Studio in Monterey Park and started firing an automatic handgun. Brandon Say wrestled the weapon away from the assailant.
He was looking past me into that ballroom, and then it seemed like he was looking for people to harm, I think, because the way he was looking seemed like he wanted to harm others.
Brandon Say tells ABC News something just came over him to try and grab the gun. The shooter was later found dead of an apparent self-inflicted wound. The Biden administration says it's been receiving updates on developments. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nance, thank you so much. Just a couple stories to round out this Monday, because a lot of fun and wacky things. This is our second most read story in the Bloomberg in the past 60 minutes. We kind of talked about it with our TV colleagues, but a surprise announcement by Mars that it's suspending Spokes candies.
Company.
Yes.
So they can do what they want.
But those little cute little candies, you know, that dance around, talk to you, do funny things, the Spokes candies, talking M&Ms that star in the brand's advertisements is sparking speculation over whether it's a reaction to conservative furor over a cheeky setup for a Super Bowl ad.
Okay, so changes to the talking M&Ms early last year aimed at making them more inclusive, and it prompted some conservatives, including Fox News commentator Tucker Carlson, to criticize the brand for being, quote, woke. The brouhaha, which played out largely on social media, soon faded.
Samoa's apparent decision to pull its
Okay,
mascots,
this
only
is-
replace them with comedian, former SNL star, and liberal darling Maya Rudolph, has ignited an online debate over the company's intentions. What do they really mean to do?
Okay, it's got to be a Super Bowl ad.
I think that's it. Come on,
Right?
you can't get rid of these dudes.
No.
They're adorable.
Also, what did they do wrong?
I mean, come on. Did they change their shoes? What's that?
I don't know.
I mean, it's okay.
There's no way.
I mean, I don't know.
Okay, so we'll see.
Yeah, we'll see. Where else do you want to go?
I want to talk TikTok bans.
Let's
Alex
do it.
Brinka is out with a story today. She covers social media for us. She's based in our LA office. She has a story about how TikTok bans at major colleges are infuriating the students. A new ban on TikTok at many state colleges around the U.S. offers a snippet